Hey, welcome back. And in today's video, we're going to talk about the effects that war has on international economies and even your portfolio. The recent news of attacks on Israel and the ongoing tragedies in the Middle East, as well as the long drawn-out war in Ukraine, it's important to understand the effects that these events have on economies worldwide. And I want to make it clear that this is not a video on how to make money at the expense of countless lives lost, but rather an exploration of the disruptions and ripples these terrible wars have on worldwide economies. Now, I hope no one wants to see the destruction of human life anywhere in the world. However, given the unfortunate reality that our world will always be faced with such plagues like war, it's important to comprehend their effects on you and international economies, especially when the US federal government likes to get involved in conflicts throughout the entire world. Now, in this video, I'm going to outline the major effects that continued war could have on the market and the economy as a whole. Now, with that, let's get right into the first point: heightened uncertainty. It's no surprise that in a world with large amounts of globalization, when a war breaks out, there can be massive disruptions to supply chains that can cause significant shortages and the ensuing inflation that follows. And if there's one thing that the markets hate, it's uncertainty. And war brings about just as much uncertainty as you can think of. Now, some of this uncertainty manifests in the overall money supply that may be created by central banks, the war zone's destruction or occupation of critical infrastructure and factories, or the human capital that is no longer in the workforce but is now fully occupied by war efforts, or even more tragically, lost. All of these vectors of uncertainty shake many investors out of the market, where they would rather sit in treasuries or other safe haven assets than risk their money in a fragile, globalized supply chains that are susceptible to the war's negative effects. Although war has the potential to disrupt markets, many times, if the countries are geographically far away or have low impact on local economies, many companies can be unaffected by these negative uncertainty effects. This could create a buying opportunity to purchase companies that were sold off because they were included in a basket of others that were affected and can now trade at a discount. Now, the second effect that war tends to have is rising oil prices. It's no secret that war usually consumes a lot of oil because they need to fuel their massive machines like tanks, planes, and cars. And although you may just think, well, the cost of oil is rising, that doesn't necessarily affect the business that I hold. But this has massive downstream effects on almost every business, regardless of if their supply chains are in these affected areas or not. Now, although the US is relatively self-reliant when it comes to energy and oil, these disruptions in the oil supply or the cost of oil in the Middle East can still affect the overall oil supply and price, which can affect other nations we trade with or rise transportation costs for companies throughout the US. Now, not only will this raise costs for companies that rely on large amounts of energy to run their business, but the oil companies will also benefit from the rise in prices as they will now become more profitable. Although investing in oil companies is somewhat contrarian right now, it could be a space for outsized returns in the short term, due to these wars and the overestimation of the speed at which we can transition our energy needs to renewables. Now, another industry affected by wars is quite obviously the defense companies. Now, defense companies like Lockheed Martin and Raytheon usually benefit the most from wars because they are often the biggest suppliers of military technology like missiles, ammunition, and large assault vehicles. And these two companies are the leaders in those things. And although it's obvious that these companies are major beneficiaries of increased turmoil, there are other companies like this that can benefit, like Palantir, which creates software that seeks to pool massive amounts of data together in efforts to reduce uncertainty involved in complicated situations that have many variables. And with war having so many variables and moving pieces and lives being on the line, Palantir has found itself a good market in the US government's military. Because the stakes are so high, they want to reduce uncertainty at all costs. Now, Palantir has large contracts with the Department of Defense and even with Ukraine, where they are currently at war with a large superpower and have championed this software as a key part of the reason they have been able to stand up and protect their country. Now, regardless of how you feel morally about these companies, it is undoubted that these events will be a large tailwind for these companies and their associated stocks. And although many have a problem with investing in defense companies because they make weapons and systems that help kill people, I think there is a better reason that investors should stay away from these companies. The reason is because these companies are often the only bidders on certain contracts, they use their negotiating power to take advantage of the government by making these contracts cost more and last longer than they actually need to. Now, this is a huge plus for investors who can reap the rewards of these unethical practices, but I don't think it's a good practice to invest in companies that abuse their monopoly power against the taxpayers. Because if someone comes to compete with these companies, they could see a drastic impact on their earnings. Anduril is a great example of the future disruption headed for this industry, as they have flipped this business model on its head, and they make products for the DoD to use before they even get the contract, which is a far better model for the US government, as they know exactly how much these things will cost before purchasing them, and will have a far clearer timeline of when they will get them. Although Anduril is currently a private company, this approach to defense is something I would be far more likely to consider. Now, moving on from defense companies, I think another really key important part of what war means for economies around the world is debt, and more debt. Now, when countries go to war, this usually prompts a massive amount of spending from their federal governments, which usually in most cases does not have the reserves or resources on hand to afford the massive amount of equipment necessary for a large-scale war. This has historically meant that the central banks and their respective treasury work together to gather the funds necessary by creating or printing the money that they need. And although this money printing is sometimes beneficial to protect one country's sovereignty, this practice has many consequences that many politicians fail to acknowledge. Now, before fiat was popularized, countries had to issue bonds to their citizens in order to fund their wars. And in a way, this was a form of voting on whether or not the country should even go to war, because the population would have to fork up their own hard-earned money to support the cause. And many times, if it was to protect their own homeland, they would certainly do so. But in times where politicians want to fight wars far away, for whatever certain political purpose, most populations did not willingly allocate their money to fight someone else's fight. Now, this practice of debasement and circumvention of the voters is most definitely unethical, but regardless of its moral implications, it is the reality of our day and needs to be considered when investing in times of war. Now, this debasement often causes long-term inflation that is sometimes offset by the economic boom that war brings. However, this inflation can cause massive disruptions in certain companies. So it is vital to understand how inflation affects the businesses that you are invested in. So what happens here? War causes a lot of downstream effects, some of which are incredibly hard, if not impossible to predict. So be wary of investing in anything that is not multiple steps removed from the direct effects of these wars, because many things could change over the coming years due to how escalating these conflicts are. Now, as for what I'm doing in my personal portfolio, I'm not positioning myself any differently because of the war, and I continue to hold 10% of my portfolio in cash in case of an opportunity that's too good comes up. An example of an opportunity that is just too good to pass up is when Meta dropped over 76%, while their profitability hadn't really changed an awful lot, but they just chose to invest in the metaverse instead. And if you have cash to deploy when opportunity arises, you can increase your returns in the long term while reducing volatility in the short term. And if the US government decides to fund some of the war on behalf of Israel, we could see upward pressure on inflation, as they would most likely have to take out large amounts of debt to support this war. This could even prompt the Federal Reserve to continue to raise the federal funds rate, which could be bad for risk-on assets like stocks in the meantime. Although this is a possible outcome, I don't see the federal funds rate staying this high for very long, as the US government will have to roll over their current debt into new higher interest rate debt, which would make the annual interest payments skyrocket and make the federal budget deficit even larger. And this is because the current US Treasury's debt is usually sub 2%. And with rates being near 5%, it could over double the interest expense, which would definitely be bad for the US Treasury, and the Federal Reserve would most likely have to cut rates. Now, in conclusion, no one should want to see lives lost, especially in large-scale wars and terrorist attacks. However, it is important to understand what happens to the rest of the world when these events occur. And this understanding will make us more informed voters and investors. Personally, I do not directly invest in defense companies because I don't want to have the perverse incentives that the incumbents currently have. But that is just my personal opinion. And there is a good argument to be made about the importance of defending our country, our rights, and our freedoms throughout the US and Western society. But that's up to each person to make their own individual decision. And regardless of your stance on defense companies, they will most likely make more money as the world continues to have increased turmoil. And don't forget to remain cautious with your investments, as we will certainly see some fluctuation depending on how the war unfolds and the effect that it has on oil prices and political policy. Now, with that being said, that's all I have for you in this one. Thanks for watching, and I'll see you in the next one.